What if I told you Bitcoin's next move was already written in the stars? Well, not exactly the stars. It's written in the US dollar chart that I have up right here. So, you see this chart? It's just not noise. This right here is the inverse roadmap for Bitcoin. Every time the US dollar index peaks and starts to fall, Bitcoin doesn't jump immediately. No, it lags on average of 119 days. Isn't that very similar to M2 rocket fuel that we've been talking about a 105-day lag? Very, very similar, huh? See how things kind of line up? And guess what? That 119-day window is closing fast, which means the next Bitcoin move can be explosive. And remember, the fault lies not in the stars, but in ourselves for not seeing what the marketplace is flashing in front of our eyes, because this is like a movie playing out where legends are made. Let's get into it. Welcome back, Crypto Crew. It is your boy Tom here, bringing you the hottest in Bitcoin and crypto action. Please give us a like. Make sure you hit subscribe. And don't forget to come on over to X and follow us on X, where we talk about Bitcoin and crypto all day, every day. Let's get into it. Let's look at this DAX or dollar index, okay? Now, listen, this is important because, as we said, we want our traders to be the smartest traders in the planet, or on the planet, I should say. Not in the planet. But anyway, let's break down what the dollar index actually is. The dollar index tracks the strength of the dollar against a basket of major currencies, the euro, the yen, the pound, etc. Now, when the dollar index goes up, it usually means global risk is off. So money's flowing into the safety of dollars. They're buying U.S. bonds. They're buying, they're looking at the dollar, the stocks. They're going into those instruments. That's typically bad for Bitcoin, because Bitcoin's like a risk asset right now, but it's overtaking that. It's overcoming that. But when the U.S. dollar index rolls over, that's your signal. Risk appetite is returning, and Bitcoin thrives in the environment. That's why understanding the dollar index isn't just smart, it's critical for traders. So I'm going to be asking you all to do a little bit of homework. Just don't stare at, your Bitcoin charts and your Ethereum or your XRP or Sol or whatever you're looking at. You need to start tying all these things together. And we're here to guide you. We're here to help you through that. So that's why we're pointing out these things that are very, very important to look at. Remember, you are trading, or you're playing in one of the most competitive arenas there is. Okay, the trading industry. This is not easy. This is not print money type of stuff. It's not push button profits. You need to start to understand the relationships, and we're here to talk to you about them. Now, when you understand and you just start to learn, it's very simple stuff. When the dollar index falls, Bitcoin should rally. Okay, now it should. All right, so you need to watch. Also, now you go into shorter time frames, which we're going to get into in a second. But however, understanding this gives you a macro edge over the herd, and that's exactly what we're trying to do here. And the driving force of the dollar index right now is good old dollar yen. I got a weekly chart up over here. You can see that dollar yen has just recently broken a weekly trend line. Okay, we've traded down to 139. The market tried to come back up to 145, 140. Actually, a rally to 148. Yeah, that was a nice little rally upward, but now it is starting to break back down again. Now, dollar yen is the driver of the US dollar index. Why? Because dollar yen is the risk on, risk off. Whenever the marketplace is fearful of what's going on, and markets get wobbly, they run into the yen. That they'll crash euro yen, they'll crash sterling yen, and dollar yen is the driver. So that's the main driver of the US dollar index at this time, because the euro and the sterling have been moving slightly upward, but they're not anywhere near how the fall of the dollar is against the yen. So let's get back into this DAX chart one more time. I hate to get that get so long into that, but it's important to understand. So this chart highlights the lagging inverse relationship between Bitcoin and the US dollar index. And it's been crazy accurate. Now, this is pointed out by Frank, our analyst, because he's always doing research. He's always looking for relationships, and that's what you need to start to do. And we're going to lead you. We're going to lead you along. So make sure you tell all your friends about us, unless you want to be like the smartest guy at the cigar shop or something, and you want to keep it for yourself. But I would suggest you tell all your friends about us. Anyway, since Bitcoin bottomed in late 2022, okay, and the US dollar index topped around the same time, we've seen a repeating pattern. Every time the dollar index begins to drop, Bitcoin eventually explodes higher, but with a lag of about 119 days. Like we said, kind of like that M2. It's happened more than once. It's happened every single time since the bottom. And what phase are we in right now? Well, the US dollar index has turned, as I showed you on that dollar yen chart. Dollar yen is actually, the yen is actually gaining strength. That's going to drive the index further down, especially if the euro takes off and sterling takes off. Well, guess what, man? It's going to get hit hard. And if history repeats, Bitcoin's next move will be expansive, and it's just a short few weeks away. All right, let's get into the short-term charts, and let's get into the analysis for the day. All right. As we see right now, I'm going to go over to, where's my secondary chart right here? All right. Here's our megaphone pattern, which has been our friend. Okay. Bitcoin all-time high reached 111, 112,000. It's now testing former resistance as support. It's healthy price action. We told you that we could get a movement down to 106,000 before we could start the rally back up. We've come down to like I think 106.5 or something. I'm not even really sure exactly where the ultimate low is, but it's been testing that point that I have out there. It's trying to make me look like an idiot. However, what's the scenarios? Well, the scenarios are that we could break the 106 in the short run because of all this tariff crap. And of course, if Trump makes another statement like 90% tariffs, we have to be aware of that. But I really don't see the coin itself falling below, all right, I'll go to an extreme and say 104 will be the next major support, and then 99,000. I don't really see it happening. Because if we come on over to Bitcoin on the weekly chart, we're seeing the same script play out over and over again. We get, consolidation. Let me get my little brush over here. We get consolidation, explosive move up. We're getting consolidation once again for the next explosive move up to the 120,000. All right, so however, of course, marketplaces always can do like the retrace like we're talking about, but it's a healthy retrace because as you can see right here, we had consolidation, breakout, okay, 96% rally. We had consolidation, breakout, 51% rally. Now we got the next pump loading right now. What's the top going to be? Like I said yesterday in yesterday's video, it's really important to understand that Bitcoin is overtaking GDPs of countries. We've got 4 in the bag. We've got 5 coming up. If we hit 140, we overtake the UK. This is insanity. So I'm not even worried about dips. I'm not worried about dips at this point. I mean, like I said, it's in the stars, man. This thing is really, really taken off. Okay, so let's get over to, I keep hearing the cries. I keep hearing the whining, but before I get over that, I want to go right here. All right. Now we're talking about altcoin season. Everybody, when's altcoin season start, man? When's altcoin season? Listen, patience is the name of the game in trading. Okay? And you got to understand altcoins pronouns. They're late and almost there. Okay? But here's the proof. Altcoin season is starting to load fast. Bitcoin dominance has broken down. Okay, RSI just basically snapped. The MACD flipped. The wedge is cracked. Don't fade the signs. Be early or be exit liquidity. Okay, I mean it's all here for you. All right. Now if I come on over to the good old 4-year cycle. All right. The 4-year cycle, I want to talk about the macro picture. Risk sentiment took a hit with some tariff tension. Yes. But crypto held its ground, and that's bullish. ETF flows remain net positive, and we're seeing strong whale activity on chain. Remember, this is all happening while Bitcoin is still lagging the dollar index, which means rocket fuel it hasn't even ignited yet. It hasn't even ignited yet. So I would suggest that we're looking at the 4-year cycle right here. All right. You're standing where legends are made, all right? You're standing where legends are made. History says altcoin season is loading. Just be patient, okay? Get positioned, of course, with your head and not over it, all right? So I want to take you over to one other chart right here where I show you, okay, Bitcoin versus Ethereum, all right? 2017 to 2021, history is showing us that it's getting ready to go. Okay, we bottom, we break out. Altcoins just melt people's faces. Are you positioned? Are you sidelined again? Don't be crying like a little biatch if it happens and you're not in. All right, because the fractals are mirroring the same crashes, same bounces, same. Now comes the vertical parabolic phase of $111,000 rally loading. Miss it, and you're going to be headed towards Regret Town while the party's happening in good old Legend Town. All right. So before we wrap up, crew, I got to tell you about our trading community. You just click this link right here in the description to be taken over to this site where you can sign up. We're going to be dropping insane alpha, and we're going to be talking about, all things trading opportunities. Everything is completely free it's completely free. All right. So please tell your friends about it. I have an announcement to make. I was supposed to make it on like Monday or Tuesday, but I'm gonna say it now. We're gonna be starting to trade live. Okay, so we're going to be having live trades. I believe it's starting next Saturday. I'm not sure. I'll update that for you on the week, but we're definitely going to be starting live trading, so you could follow us, and we'll be giving out gems over there as well. You want to follow us with a trusted broker. Click this link right here. You'll be taken over to our brokerage site. WEEX, where that broker is perfect for our trading strategies. Low fees, fast executions. We got a trade running right now. We're holding because we got the nads. We're not worried about it. We're not worried about short-term dips. We're in, and we know where this coin is going. So that's a great broker that you could check out and join with if you want to trade with us, especially if we're going to be trading live. So that's it for our breakdown today, crew. I hope that you enjoyed it. Hope I gave you a little bit of an education on the US dollar index. Don't forget to come on over to X, follow us on X, and don't forget, trade with your head, not over it. Do your own research. These are just my personal opinions of things, although they've been right about 83% of the time. Got to put that in there. And remember, always, as a short-term trader, enjoy the party, but dance near the door. Cheers.